Hello, everyone. This is the Free American Press with your host, Alexander Horat. And today we're joined by Gary Savage. And Gary Savage is a retired entrepreneur living in Las Vegas. He has been investing in stocks and commodities for 20 plus years. He is a self-made multimillionaire and attributes his financial successes to savvy investments made in owning and selling several businesses, real estate, and more recently, the stock market. So we're very happy to have you on the show, Gary.
Well, thanks for having me, Alex.
If you enjoy our content and want to keep seeing amazing guests and insightful conversations, please like this video, share it with friends, and subscribe to the channel. If you'd like to support the channel directly, you can contribute through Zelle or Venmo. Every little bit helps me continue bringing you interesting guests and great content. Thank you so much for your support. Yeah, so I guess my first question, we've seen gold and silver been going up recently. Do you think the silver and gold ratio will fundamentally change, or do you think it will stay mostly the same?
Generally, what happens is towards the end of the bull market, when we get into that kind of parabolic bubble type phase, silver will catch up, and that ratio at the last bull market in 2011 it went to 32 to 1. I'm expecting similar, somewhere between 20 to 1 to 30 to 1. And when you see that, that'll means it's time to sell your precious metals. We're at the top of the bull market, top of the bubble. It's time to look for something else that's undervalued.
Yeah, it definitely makes sense. So do you think we're in a bull market right now, or is it more of a stabilizing period?
Well, we're clearly in a secular bull market. We're in some kind of an intermediate correction. I am really not sure whether this is going to have a, well, it may be have had or is having a B wave bounce that then has to roll over and make a little bit lower low, maybe down to around 3750, I think is the 50% Fibonacci retracement of this intermediate cycle. That's one possibility. Another possibility is that we churn sideways, and the last, it's either three or four corrections have been sideways churns rather than the typical ABC move. And it's also possible that we're just starting to kick off the, say, the last year and a half of the bull market, and this is all we're going to get for a correction. Is we retraced to the, or gold anyway did, I think silver did as well, but retraced to the 38% Fibonacci level, and that may be it. That may be all we're going to get, and now we're off to the races again. And I do expect that's going to happen at some point when we really start to get well into the final year of the bull market. Most of the normal parameters aren't going to be met anymore, and it'll be volatile, but it'll mostly just be an aggressive move higher.
So your gut feeling is that this correction is over?
Honestly, I don't know what to think at the moment. I originally thought we were going to get a B wave bounce and then a C wave down, something that would take us back to about 3750. But then silver made a new high. And generally, that I don't expect that to happen if we're in a B wave bounce. Gold hasn't made a new high, but the fact that silver did makes me think that gold is likely to follow silver higher. So then at that point, I started to think, well, maybe we're just going to transition into another one of these multi-month sideways consolidations. That's still a possibility. Um, and it's still a possibility that we could have a C wave. Uh, if you ask me for the odds, I'm going to say they're 33, 33, 33. I have
Okay.
no idea what's going to play out at the moment. I'm going to need to see next week, see how the metals behave next week. And the stock market may, to some extent, have an effect as well. It's trying to move down into an intermediate cycle decline, one of those corrections that take, you know, 3, 4, 6 to 8 weeks, something like that, a little longer. Usually price will drop below the 50-day moving average and turn it back down. Sometimes it'll test the 200-day moving average, but I'm not sure of even of that as well. We're kind of running out of time in this daily cycle, and it's not really rolling over very decisively. So, everything may have already bottomed, and stocks may not. You know, At some point, they'll give us a correction, but it may just take longer than I think. It's already taken longer than I thought it should have, and it may just take even longer than I think.
Yeah, definitely. So, from your gut, I know there's a lot of percentages and a lot of changes, but what's your gut feeling? When do you think this bull market is going to end and we're going to see a major correction in the gold and silver market?
So for the secular bull market to end, the bull market that it actually started in 2000, and then we had a cyclical bear market from that top in 2011 to that bottom in 2015, but we were still in a secular bull market. We did not make any lower 4-year cycle lows during that period. And we're still in that long-term bull market. So it's depending on whether you count it as starting in 99 or in 2001, we're 25 to 27 years into this bull market. So we're very mature. If we don't churn sideways and if we don't make a lower low, a C wave, if we just take off to the upside next week and gold makes a higher high as well, then I'm going to say we're in that final year and a half of the bull market. Generally speaking, when the general public kind of starts to take notice of something that, hey, there's a lot of money being made here, and my neighbor's getting rich and I want to get rich. And so when that happens, when the general public starts to take notice and pile in, I figure you've got about a year to maybe a year and a half. And then you'll get that parabolic move that goes straight up. And at some point here, there won't be any buyers left, and that'll be the top. And then these moves that go straight up also go straight down. So I think a lot depends on how this correction unfolds. If it's already done and we're off to the races again next week, then this is probably has maybe at most a year to a year and a half to go. If it churns sideways or gives us that C wave decline, then we're still in the wall of worry, and that means that we should have more time. At that point, maybe we have 2 or 3 years left in this bull market. So, if you want higher prices, if you want the ultimate higher price, the better scenario right now is either for gold to give us a C wave down, scare everybody out, or it needs to churn sideways for 2, 3, 4 months and then make another leg up. If it starts that next leg up immediately, then we're getting close to the end.
Yeah, that makes sense. So, what's the biggest misconception people have about bull markets in metals?
Hmm. Well, I don't know what to. Well, I don't know if it was a misconception, but I think one of the factors contributing to the aggressiveness of this move since it came out of that kind of, I guess it was a triple bottom at 2000, was the metals have been pretty heavily manipulated for decades. And gold broke that manipulation in 24. Yeah, it was 24. The spring of 24, when they tried multiple times to drive it back below 2000, they couldn't do it. And then when the short squeeze started, we just had this violent, aggressive rally that has taken us from 2000 to 4400 in just a little over what, a year and a half. The suppression in the mining stocks also broke last year, and I think it broke in silver this past year when they tried for weeks and weeks and weeks to prevent it from getting above 33. Once it got above 33, there was a few hesitations along the way, but I think the suppression of the silver market broke at that point as well.
Okay. So, a big question for me is China's Shanghai's gold exchange gaining influence over the global gold pricing at the expense of the LBMA? And what geopolitical and economic dynamics are driving this shift?
So I tend to think these are just narratives.
Okay.
Price is going to go where it's going to go. You know, you'll always there's always a narrative. When we
Right.
get after a long rally, people will become convinced that there's some, quote unquote, fundamental reason why it's different this time. And that's the reason that price can't go down. I heard several years ago in the uranium market, well, uranium's priced in a dark market, and so there's shortage or whatever, and so price can't go down. And I kept warning people, I says, um, corrections have nothing to do with fundamentals. The fundamentals don't change. They have to do with sentiment. You just, at some point, you just run out of buyers. Everybody's bought that's going to buy. And some people, big money, start to take profits, and then you get a profit taking event. And that's all these corrections are. They're not a change in the fundamentals. They're just a change in sentiment, and they're just a profit taking event. Eventually, the fundamentals kick in again, and the bull market makes another leg up. So, I heard that same narrative here recently in silver. Well, there was a shortage of silver, and there was a shortage in where was a shortage in was it in London? I think it was the shortage was in London, but there was plenty of silver here.
Right.
And so, silver just moves over to London. Um, and sure enough, silver corrected. Everybody was telling me I was a fool for thinking that silver was going to correct. The shortages, it can't correct. It did. Dropped on what, 15, 17%, something like that. Miners dropped about 20%. So I tend to think that this is a narrative that, the Shanghai exchange is going to control price, blah, 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 whatever it happens to be at the time. It's just a narrative for why analysts want to find a reason for why something's happening. And the reason gold and silver are going up is because it's a bull market. We're in an inflationary environment, and I think the dollar is probably in the declining phase of a 3-year cycle. And so, metals just have further to go. But they haven't given us that linear move straight up yet that signals the end of a bull market. Until they do, I expect there to continue to be in a bull market. And you can pick whatever narrative you want to pick for the reason for why it's doing it. I just think it's just a bull market.
Yeah, that definitely makes sense. So I guess my next question after hearing that is you said they were trying to manipulate gold and keeping it under $2,000 an ounce, and they weren't able to be successful in that, and then gold hit all-time highs. So why do you think they weren't able to be successful manipulating the gold market anymore like they have been for a long time? Do you think there's an event that caused it, or do you think it's just the market?
I think it's just the market, and then when you try and suppress a market unnaturally, you will create shortages. And we did have a shortage in London recently, and until we get the silver over there, the shortage will remain. Maybe it's already alleviated by now. I don't know, but the trying to suppress price, ultimately it just makes the price go a lot higher than it would have gone naturally, because uh, eventually you just create shortages in the market. Um, I, I've said this before. I think the original reason to suppress the price is because um, governments figured out back in, was it 2008, that they figured out that if you can keep the stock market elevated, you can't have a recession if you can keep the stock market elevated. So all governments now try to inflate their stock markets. The problem they have is at some point that liquidity, if the stock market is overvalued, that liquidity will leak into the commodity markets. And if it gets into the energy markets, especially if the price of oil goes up 100% or more in a year or less, it's such a shock to the middle class and lower class that they stop spending. Well, all they can afford is just to put food on the table and gas in the car. They can't they can't go to Starbucks or out to eat or anything like that. So it starts that's what causes recessions generally, unless we sabotage ourselves by shutting down the world for a virus.
Yeah.
But generally speaking, that's what causes a recession is a spike in inflation, specifically a big sudden move in the price of oil, because that affects everything. Everything has an energy component to it. And that, governments figured out that if they can keep the stock market elevated, you can't have a recession. But they overlooked the fact that that liquidity that they were pumping out to keep the stock market elevated just leaked into the commodity markets. And that's back in 2008 when oil went to $147, and it destroyed the economy, and we rolled over into recession. So all the money printing, trying to keep the stock market elevated and keep the real estate market inflated, all it ended up doing was leaking into the commodity markets and the energy markets, and it caused a much worse recession than we needed to have. And so I mean, this was pretty easy to figure out. Is like, hey, we got to keep the stock market elevated, but we need to try and keep the liquidity out of the commodity markets. So you can try and suppress all the markets. The oil market is huge, really difficult to suppress the oil market. Or you could try and suppress the canary in the coal mine, which is gold. If you can keep gold suppressed, generally speaking, what happens is most of the other commodity markets kind of stay in check, and the liquidity stays where you want it to stay in the stock market and the real estate markets and the quote unquote good inflation. And that worked until it didn't. And now gold is, it broke loose last year, and I think we're on the way to the final top. And at some point, I suspect that energy is going to start to catch up as well.
Yeah, that definitely makes a lot of sense. I think inflation has a lot to do with the commodities market. So, do you think the Fed is losing control of real inflation, or is it still managing the narrative successfully?
Um, I think they probably are going to, the same thing happened in the 70s. They started cutting too soon, and inflation came back. I think that's probably going to happen here as well. I think that you're going to start cutting too soon, and inflation is going to come back, and we're going to have a problem again.
Yeah, so you think we're going to see lower interest rates?
Yeah. If the stock market corrects significantly between now and the December 10th FOMC meeting, then they're going to cut again. Right now, I think it's about 50-50 on a cut. But if the stock market has a hard move down between now and then, they're going to cut again. And the dollar will continue to roll over. Gold will probably start to rally pretty hard again. And at that point, maybe oil starts to catch a bid as well. But yeah, I think they're going to make the same mistake they made in the 70s. I think they're going to start cutting too soon.
So, what is the probability that we'll see hyperinflation in America before 2030?
We're not going to see hyperinflation in America.
Okay.
Hyperinflation generally occurs in more like third world countries. It's not going to occur in the United States. We could have high inflation. I
Yeah.
think we will have high inflation. I don't think we're going to have hyperinflation, not in the United States.
Okay, that makes sense. So, my next question is how much longer can the US rely on liquidity injections to avoid a true bear market?
Um, well, AI is still, I wouldn't say it's in its infancy, but it's like early adolescence. So I don't really see the bull market in stocks ending until AI gets at least somewhat mature. I see a lot of people, saying this is the everything bubble. I am not in that. I'm not in that category. I'm not in that class with those people. I don't agree with that. The last two secular bull markets, they both lasted over 20 years, and this one is what are we, 15, 16 years? So we're a little short. They both gained 20 times or more, at least on the Dow. The last time I looked, the S&P was about 9 times from the 2008 bottom. So I think we're short still. I think stock market has further to go. That doesn't mean we can't have a cyclical bear market or a recession. I mean, we've already had one. We had the COVID recession. That didn't stop the secular bull market, and it didn't stop the technical innovation that's going on right now. I mean, AI is, like I said, it's maybe in the early adolescence. Robotics are probably still in the infancy. Those industries, those are going to be game-changing, paradigm shift type technologies, just like the personal computer and the internet was. So I think we have further to go. I would say probably 2030, maybe even 2032 or three, something like that, before the stock market tops. Um, but we can definitely have a recession and a cyclical bull market along the way.
So you don't think we're in an AI bubble?
Not yet.
Okay.
I think we will be eventually, but not yet.
Yeah.
The technology is too new still. I don't know how you can get a bubble this quickly when, it's basically what's Chat GPT, 2 or 3 years old, and
Yeah.
it's only really getting good right now. So that seems way too early for for an industry to be mature and in a bubble.
Yeah. So we saw recently that Bitcoin has lost about 18% of its value in the last 2 months. There's a lot of talk about it going down to 35,000. What are your thoughts?
I do think Bitcoin has probably formed a 4 year cycle top. Um, it generally takes, now there's not a whole lot of data for this, but assuming that it's similar to the last several 4 year cycles, it'll take about a year for it to get to the bottom. And those secular bear markets in Bitcoin they can shave off 70 to 80%, and then you'll get a bottoming phase, and then it'll come back and make higher highs. But it looks to me like we probably completed that 4 year cycle top. So I'm not terribly interested in Bitcoin right now. Probably won't be for like another year.
Okay.
35,000 might very well be possible.
Oh, well, that's definitely good to know. So what are your thoughts on possible war with Venezuela? We see Operation Spear that the president has recently stated. And what are the implications for gold prices and oil may be if we do go to war with an OPEC nation such as Venezuela?
Well, we're definitely in an inflationary cycle, and we are in a war cycle. I don't expect any of them are going to end soon, and one makes the other worse. When when we're in an inflationary cycle, people, the economies are generally somewhat depressed, and the middle class and lower class tend to suffer in an inflationary environment. Politicians do what they always do in this, when they can't cure the problem, then they blame somebody else for it, and generally they start a war. So I don't expect the war cycle to end anytime real soon. I don't know whether we're going to go to war with Venezuela. I mean, that war would last about 10 minutes, I think. Um, but what I'm really worried about is the war in Ukraine spreading into Europe, and we end up with World War III. It doesn't seem like either side is ready to negotiate, any kind of compromise. And if nobody's going to compromise, then I don't see how, um, I don't know how you can get into the war.
Yeah, so you don't think we're seeing an end of the war with Ukraine anytime soon?
Not really.
Yeah. What do you think is the biggest factor causing the war to continue and a peace agreement not to be made?
Well, they had a peace agreement in what was it, April of 2020, and Boris Johnson went over there and put an end to that. And, as I recall, I think Putin was already withdrawing his tanks and his infantry as a sign of compliance, and then they killed the deal. So then we're right back at it again. But it seems to me that, well, I don't know if I should get into too much politics here. We're talking gold and silver, but it seems like NATO's kind of egged this on by, they continue to expand towards Russia's borders, and we got Russia has neocons just like the U.S. does, and I'm sure they're chomping at the bit to replace Putin if he doesn't do something about it. So he's probably stuck between a rock and a hard place. That you got all the neocons that just do not want, and it's the same as us with the Cuban Missile Crisis. We're just not going to allow it. We're not going to allow somebody with missiles on our border, and Russia's the same. They're just not going to allow it. I don't know whether invading Ukraine was the right move, but it was pretty clear NATO was going to continue to expand until somebody called their bluff. Um, and they didn't honor the Minsk agreement either. So yeah, I don't know. It's just a lot of factors. I think there's fault on both sides, but it just doesn't appear that anybody wants peace. And if they don't want, and Europe's broke basically, so the politicians are going to do, like I said, they're going to do what they always do. They blame somebody else, or they create a false flag, and it's this guy's fault, so let's go to war. So I don't, I just I hope I'm wrong, but I don't think I am. I think it's going to get worse.
No, what you say makes a lot of sense. I think it's definitely going to get worse, unfortunately. Peace doesn't really seem to be the goal. But getting back into the markets and the commodities, what role has saved you the most money across your entire trading career?
I don't short. Shorting is tough. I know a lot of retail traders like to do it. I guess maybe it makes them feel good, or they feel like they're a badass trader or something if they can short. But I have found that for 99% of people, if they add up all of their short trades, especially over their whole career, but even over like a 5 year or 10-year period, they're going to have some winning short trades. And it's kind of like going in the casino. You win a little bit, so that keeps you playing. And
Yeah.
then eventually you lose all your money. If you keep playing, you lose all your money. Same thing with shorts. You'll win some, but generally what I find happens is that over the long run, you lose more than you make. And so my advice to I know nobody will take it, but if they want to save themselves some headaches, um, just forget about shorting. There's almost always a bull market somewhere. If if the market that you're trading is in a bear market, or is just going nowhere, look for something else that's in a bull market rather than trying to short. Shorting is just difficult. Shorting is for hedge funds that have hundreds of analysts that can go out there and discover sick companies that are going bankrupt. And that's what you can short and make good sustainable money. But there's no way that you and I can compete with a hedge fund with 100 analysts, scouring every little company in the country looking for the ones that are sick and dying. So it's just not, trying to short just basically off of charts and such is not a great idea. I think you do yourself a favor if you don't do it.
Yeah, I think that's a good investment advice. Is there any stocks right now that you're looking at that are pretty good?
I do not trade individual stocks. Um, I trade ETFs, like especially in the mining sector. You could have a mine flood, or a CFO could embezzle some money from the company. And I did a little bit when I first started years and years ago, and I got caught. Like even one of the best companies in the world, Wheaton Precious Metals. Basically, they had like 7 employees. Um, you know, they they're not a miner. They just loan money to miners, and then they get the silver at like $4 or whatever. And I mean, you couldn't ask for a better business plan, but they had some kind of company specific thing happen. I can't remember what it was one year, but that company dropped, I want to say it was like 30 or 40%, like in 2 weeks, to the best company with the best business plan in the world. If it can happen to that, then any company is susceptible. So I just don't trade individual stocks anymore at all. I just trade ETFs.
That makes sense. Yeah, that's a good way to do things because there is a lot of bad things can happen with when you buy stocks. So back onto commodities. So we were talking earlier. I just want to get your gut feeling on this. What do you think gold and silver prices? What's your prediction for this time next year?
Um, if if we don't finish this correction and we just we just next week we're just back up to new highs again and we're off to the races again, then I think gold probably goes to at least 8,000, probably 10,000. And if we assume a gold to silver ratio of say 30 to 1 at the top, well, if gold is 10,000, silver should be 333, $350. Not now, I think a year is probably too quick to get to that. Might take a year and a half. If we get a normal correction, an ABC move, or we turn sideways for 2 or 3 months, then we're still in the wall of worry. It extends the bull market out, maybe 2 or 3 years. And in that case, I think we could see 10,000 to 15,000 on gold and $500 on silver.
Wow, that's a pretty big increase. I definitely think it can happen though, especially with all the things going on today. Uh,
Mhm.
I would like to let me check here. I'd like to share the screen to show Gary's site. So Smart Money Tracker, so people can subscribe. Please subscribe to Gary's site. You can get a lot of really good information. Here's his website, and he has some videos there. Smart Money Tracker. And he also has his YouTube channel, which you should subscribe to, Gary Savage. And he has a lot of great videos on there as well. Is there anything else you'd like to say about your company and in this video?
You could probably follow me on Twitter. That's where I've been. The website you're showing there is my blog, which is I haven't really done much with that in months. Um, I post most of the stuff to Twitter nowadays. So whenever I do a video or have a comment on the stocks or metals or whatever on the markets in general, I'll post it to Twitter. My Twitter name is Gary Savage and then the number 1.
Oh, that's definitely great. Yeah, I follow you on Twitter. That's please follow him on Twitter, X, and I would just like to thank you, Gary, for coming on the show and providing all your insight on the commodities and geopolitical events. And definitely would like to have you on the show again sometime.
Well, thanks for having me, Alexander.
And thank you all to everyone who's watching this video. Please subscribe, like the channel, and share this with your friends. Thank you all for watching. Goodbye.